Hello traders, Jason here with SwingHigh.com. It is Thursday, January 14th, 2010, and this is your post-market analysis. As you can see, we had slight gains across the board here. The S&P and the Dow and the Nasdaq all up about 0.25%, and the Russells and financials were up 0.5%. So it's nice to see them leading the way. Let's take a quick look at SPY, which is the S&P 500 tracking ETF. The day's action here, we opened with a slight gap down, ran up, and then pulled back to support here. Came up, and near the end of the day, we found resistance at Monday's opening price, and then finished the session with a slight pullback. After hours, things are looking a little choppy. A couple earnings reports coming out. I'm pretty sure Intel is reporting right now, so the market is trying to decide what to do after hours. Let's take a look at the daily chart. I wanted to draw your attention to the slowing momentum we're seeing. Things are still bullish, don't get me wrong. But as you can see, this trend line here, we made higher swing highs and higher swing lows, but we, how do I say this? We keep bouncing less off of this line, if you will. This support line is being tested more and more lately, and I would definitely like us to see a pop on the S&P. For things to remain bullish in the long run, we need to pop off of this support line and come up here and test the 120 area, and we need to do that soon. Otherwise, a breakdown under this support line could be pretty bad. So I just wanted to draw your attention to the fact that we are struggling to get off support here on the S&P. The other indexes, the Dow, looks pretty good. I'm going to draw a trend line in here. It's pretty much the same story though. As you can see, we have that support line coming up, and the price is struggling to get off of that support line right now. So in the near future, we need to see some definitive action. The markets need to make up their mind if they want to continue to go bullish or not. Now, this is the Nasdaq, which is a slightly different story. It was relatively strong to the other two indexes for most of this rally since last March, and it was relatively weak, but right now it's still got a similar story in that it needs to get off of this support line. The Russells, if you recall, I was talking about how this was a double top back in October, and it was a confirmed double top. However, it turned around, and now it is basically not a double top formation, in that we are above that resistance line now. So I'm going to draw that in. There we go. So things are looking bullish again on the Russells, which are good, which is definitely a good sign. And the Russells are showing some relative strength in that they are pulling off of the support line quite well. So I'm happy to see that the Russells are relatively strong, as they will be one of our leading indexes getting out of this mess. And the financials are also struggling here. They were extremely strong compared to the other indexes early in the rally, and they've been chopping sideways for, well, since September, it seems. So financials are holding up in this high base. I would love to see them break out above, or at least on the XLF, above 1576, or at least above 1540 here, and that would be very strong for the markets in general. So thanks for being a part of SwingHigh.com. I'll talk to you tomorrow.